Welcome to the Excalibur Financial Services Weekly Market Update. My name is Conrad Karwowski, and I'm an associate with the firm. And my primary roles here are managing the investments and also the information technology. The economic data that we go over is from the prior week, ended on Friday, market close, and it's provided to us by JP Morgan Funds, and we certainly appreciate them helping us out with this. Now, this particular slide shows you all of the data, but we like to narrow it down in an easier to read format. As you can see from this third slide, the S&P 500 was down a little bit last week, about 0.67%, but year to date, it has still increased 5.88%. I'd also like to point out three areas that we have overweighted since the beginning of the year in our portfolios, and those are emerging markets, large cap value, and high yield. You'll see the Russell 1000 value year to date is up over 8%. The MSCI EM, which is the emerging markets index, is up almost 16.5%. And high yield bonds, which are towards the middle of the slide, year to date are up 15.86%. So we did make some good decisions there that have worked out for our clients. Now, looking at treasury rates, the 10-year treasury is a good benchmark to look at. We can see that towards the end of the year last year it was up over 2%, but it had then consequently declined. In the end of September, it was down to 1.6, and we have seen a slight increase up to 1.86, more than likely in anticipation of the Federal Open Market Committee meeting that's coming up in November and then again in December. We're not expecting rates to go up this meeting, but possibly in the December meeting, a 25 basis point increase. This is really a repeat of the bottom of the slide we had seen prior, but this is an interesting one here. Again, last week the S&P 500 was down about 0.67%, and you can see most every sector was down. Technology, telecom, materials, energy, consumer discretionary, healthcare, real estate. But if we look year to date, the only area that's down is healthcare, which is pretty good news. Now, as far as economic data that came out last week, we had third quarter real GDP grew at 2.9% over quarter, so over the third quarter of last year, which is a pretty good number, a little bit higher than expected. And we also see that employment cost index was up 2.3% year over year, which means that employers are having to spend more to pay employees between their wages and their benefits, which essentially means wages are going up, which is something that we have not seen a whole lot of up until this recent year. In the week ahead, we have some more data coming out, unemployment, the Federal Open Market Committee meeting, which they may raise rates. We don't think they will. And a few other data points that will be coming out. If you have any questions, please feel free to contact us. Phone number is 904-619-5944, or you can take a look at our website, www.excaliburfs.com, where we also have a blog that's regularly updated. Thank you very much.